With a whole pandemic happening recently, the Canadian government has stepped in and decided to give some sort of financial stimulus to the economy. And one of these things that the Canadian government has done is provided CERB. This is the Canadian Emergency Relief Benefit Fund that Canadians who lost their job due to this beer sickness recently can receive up to $2,000 a month. But what's been happening is people have been waking up and seeing that they received 2 payments from the Canadian government in a row. And typically they might see a $2,000 payment and anywhere from $1,000 to $2,000 extra. So people are questioning, what do I do? Why did I get this? So in today's video, we're going to be answering these questions of what is CERB and EI first of all, then what happens if I get both, and when do I pay it back? And also, finally, I'm going to end off with what to do with this money in the meantime. Stick around, there's a lot to cover today. Welcome back to the Fire Grind. My name is Daniel, and we're going to be talking about CERB and EI today. On my channel, I focus on personal finance, especially how we can become financially independent and retire early. So the first question we have is, what's the difference between CERB and EI? So CERB is the benefit that the Canadian government recently rolled out for any people who have lost their jobs due to the beer sickness. And EI is just your general employment insurance if you lose your job for any reason. So the question now is, can I get both CERB and EI? And the simple answer is, people have been getting both of these. And they've been waking up and seeing their bank account that they've gotten 2 different deposits from the Canadian government, one of $2,000 and the other one equivalent to the EI amount. But what happens if you do get both? Will the Canadian government come after it, or do you get to keep it? Smash that thumbs up button if you've gotten both payments from the Canadian government and currently are wondering, what do I do with this money? So to answer the question of what if you got both and will the Canadian government come after it? The answer is the Canadian government will come after it, and they've said this to many news outlets. The Canadian government actually made a mistake, and it's because they're trying to implement the system of getting CERB out there very quickly that they probably overlooked a lot of things and ended up paying people twice. And this is not a mistake on your part, it's a mistake on their part, but eventually they have to correct it. And when are they going to correct it? My guess is they're going to correct it in the 2021 tax season. So right now you have roughly 12 months with this extra cash that the Canadian government has given you. So what are you going to do with this cash? And I advise not to blow it on the next iPhone or MacBook or the next shiny object that you see. Really, you should take this money and use it to make you more money, but do it in a safe way. And the reason the Canadian government won't overlook this is because there have been 1 million job losses in the month of March. And if people got double payments of, let's say, $2,000, worst case, the Canadian government has lost themselves $2 billion. And that $2 billion is all taxpayer money that eventually you and I just have to pay back anyways. So now the big question is, what to do with that money in the meantime? Do you just let it sit there? Do you go spend it? Obviously you don't spend it because the government is going to come back for it. And I don't think it's wise to just let it sit there, because on this channel we talk about personal finance and we're all about taking your money and using it to make more money. So subscribe if you really like this topic of how you can turn your money into a larger pot of money. Now we're going to talk about 6 different ways that you can take this money and either save yourself money or invest it and make yourself a little bit of extra money. These methods are going to go in order from the least effective to the most effective, so you want to stick around. So I'm going to throw up this spreadsheet on the screen right here. And you can see on the left columns, we've got month, principal, and amount added. So month is fairly self-explanatory. This is starting from month 1 to 12. And month 1 is when you received your first CERB and EI benefit payments. Principal is the amount of money that you're going to set aside because you're going to eventually have to pay this amount back to the government. And this amount includes, for the first 4 months, we've got the extra $2,000, let's say assuming that you've maxed out EI and CERB. So the first method we have here is to put the total amount extra that you've received. And we're assuming that you've maxed out EI and CERB. So you're going to be storing away around $8,000. And you're going to put it into a high interest savings account with one of the big 5 banks. And after a full year, it's going to yield you a total of $3.50. So not much. But now if we move over and we put our money into an investment vehicle called Wealthsimple Cash, they have an interest rate of 0.9%, and over a total year, you're going to get $63 in total. That's about 22 times more than the big 5 banks. And now if we shift over to Tangerine, and they currently have a special offer going on till July 30th, where you can put your money in and get a 2.8% interest rate for the first 5 months. And after that, it's going to be 0.5%. And you're going to earn a total of $88.67 after 12 months. Next, we shift over to EQ Bank. And currently, EQ Bank offers a 2% interest rate. However, they're like Wealthsimple Cash. And Wealthsimple Cash used to be a 2.4% before this whole fiasco happened. And recently, at the beginning of March, they dropped it down to 0.9%. So I expect EQ Bank to actually drop their rate. But if they somehow hold their interest rate at 2%, you're going to get a total of $140 after a full year. So not too shabby for this extra money that you've gotten. The $140 can definitely buy you, a couple of nice dinners or your grocery bill for a week or two. And now the last two methods, line of credit and credit card, you're not going to actually be earning money, but rather you're going to be saving money on interest payments. So if you have money in a line of credit right now and you haven't paid it off yet, you can use your extra money and put it against your line of credit. And here you're going to have a total savings of $350. And that's because your line of credit interest rate is roughly around 5%. Maybe it's plus or minus 1% depending on what the bank approves you for. But the biggest savings come is when you pay off your credit cards. And from statistics, we know that a lot of Canadians hold credit card debt, and maybe they're about a week or two away from bankruptcy if they're not getting a paycheck in. So credit card interest rates usually range from 19.99% to 22.99%. And I've even seen cards that are 29.99% interest rates. So let's just take the bare minimum at 19.99% and let's see how much you can save. Over a full year, you're going to save $1,400 on interest payments. So the thing is, you want to use this extra money to pay off any debt so that you can save on interest payments. And although you might end up having to pay back $8,000 to the government, which you put against your credit card, you might as well just pay off your debts right now because you're going to save money on interest payments and borrow money later on to pay back those debts. Because in the end, you're better off by anywhere from $350 to $1,400. I hope you've learned a bit about what you should do with the double payment from the Canadian government if you're in this boat. Smash that thumbs up button, click the subscribe, and leave a comment down below if you got any questions. Keep up the grind and have a great day.